This is Nightly Business Report with Bill Griffith and Sue Herrera.
It's over. Apple and Qualcomm have agreed to drop all litigation globally, ending a heated legal dispute that's been dragging on for years.
Competition looms. Netflix reports better than expected earnings, but its forecast left some investors wanting more.
Show me the money. That's what Zoom is doing, making it the rare tech startup that's profitable and will soon be publicly traded. Those stories and much more tonight on Nightly Business Report for Tuesday, April 16th.
And we do bid you a good evening, everybody, and welcome. This was a big day for earnings reports, and we will have more on that coming up in just a moment. But we begin tonight with the dramatic end of a long-running legal dispute between two major tech players. Late today, Apple and Qualcomm announced that they have agreed to end all litigation against each other worldwide. Litigation that involved everything from patent infringement to theft. The latest high-stakes trial involving the two companies started yesterday. And as we reported, the central issue was the royalties that Qualcomm charged Apple for the smartphone technology the chipmaker produced for the iPhone. Royalties that Apple believed were excessive. But now, after years of fighting, the battle is over. And that news sent Qualcomm shares up 23% today, while Apple shares rose just about 2 cents. Josh Lipton starts us off tonight.
It was talked about as one of the ugliest corporate battles in history, and now it's over. The agreement dismisses all litigation between the two companies, includes a one-time payment from Apple to Qualcomm. We don't know how much that payment is for. The companies also reached a new 6-year license agreement, as well as a 2-year option to extend and a multi-year chipset supply agreement. That combination of licenses and chips will add an estimated $2 to Qualcomm's EPS as product shipments ramp. This trial was important for both companies, but especially so for Qualcomm, because it drove right to the very heart of its business model. Qualcomm sells chips, but it also licenses patents for a royalty on the price of each device. That's its bread and butter, which was under attack in this case. Now that threat has been removed, and Qualcomm investors are breathing a big sigh of relief. For Nightly Business Report, I'm Josh Lipton, San Francisco.
And now to earnings and late-day results from IBM, which is one of the best-performing Dow stocks so far this year. The company reported a revenue miss as results from its cloud business cooled off. Big Blue earned $2.25 a share, 3 cents above expectations. But revenue fell from a year ago to $18 billion, and the stock was volatile in initial after-hours trading. Deirdre Bosa has more on IBM's numbers.
IBM's latest results show that it is still struggling to shift its business toward higher margin technologies like cloud and artificial intelligence and away from legacy engines that are slowing. For a third straight quarter, sales fell, and that further disappointing investors after a very brief window last year where it grew revenue and there was hope that IBM had finally turned a corner under CEO Ginni Rometty. Now hopes rest on the company's acquisition of Red Hat, its big cloud play and one of the largest tech acquisitions ever for $34 billion. It's expected to close in the second half of the year, and investors are eager to hear how IBM plans to integrate it into the larger business. For now, its segment that includes cloud computing is struggling to grow. For Nightly Business Report, I'm Deirdre Bosa, San Francisco.
Netflix easily topped earnings expectations even after the video streaming service raised prices during the quarter. The company earned 76 cents a share. Estimates were only 57 cents. Revenue was up from a year ago to $4.5 billion. But as always, investors focused on the company's subscriber numbers and on the coming competition from Apple and Disney. And that created volatility in the stock in the after-hours session tonight. Julia Borston has more.
The headline out of Netflix earnings, while the company had a strong first quarter, it's looking like in the quarter ahead, growth won't be as robust as analysts had hoped. One factor at play, price increases in the U.S., Brazil, Mexico, and parts of Europe. Netflix saying new additions of subscribers are unaffected, but it is seeing some modest short-term churn as members consent to the price change. For that all-important subscriber number, Netflix did beat expectations in the first quarter with 9.6 million new paying subscribers. But Netflix did guide to lower subscriber additions in the second quarter than Wall Street had hoped, just 5 million, about 500,000 less than projections. earnings. Netflix also warning that earnings per share would be far lower than anticipated in the second quarter. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Let's turn now to Tuna Amobi for more on Netflix earnings and what he sees ahead for that company. He is the senior media and entertainment analyst at CFRA Research. Tuna, welcome. Nice to have you here.
Thank you, Sue.
Julia mentioned the subscriber growth and the pricing. You know, the company said that basically they do not think that new entrants will affect them, the Disneys of the world. But aren't they facing a very different landscape coming up in the next year?
They are. I think clearly, the streaming landscape has dramatically evolved with the entry of Disney and Apple and other announcements coming up. So I think Netflix has to really face a new reality. Now, that being said, we think that the impact is not going to be immediate. Over the near term, all of these players, I think, should benefit from a growing pie, especially in the international market. So to your point, I think the guidance that Julia had mentioned was quite weaker than the street was expecting. Some of that has to do with price increase still working through. But all in all, I think the underlying momentum remains intact.
What do you think is most important in terms of strategy to meet the competition? Is it the content, which can be expensive, or is it pricing? And Disney's already come out with a pretty low price for their new service.
Mm-hmm. Yes, I think content, if I can point to the singular most important factor, is to make sure your content is up to snuff. And Netflix has been preparing for this day when they basically have to rely a lot more on the original programming. That's why you see they're looking to spend almost $15 billion in cash content spend this year. As far as pricing, no question, I think Netflix's price increase appeared to be fortuitously timed, especially with Disney coming out aggressively, $6.99 per month, and Warner Media and Comcast, all others trying to jump in. We're a little wary of potential price competition. There's elasticity in the business model of streaming as consumers have more choice, but we do believe that over time, all of these major players are going to do just fine. Potential detriment of these smaller weaker players.
All right, Tuna, we'll leave it there. Thank you so much for joining us. Tuna Amobi with CFRA Research.
To Wall Street now, stocks rose as earnings season got into full swing. The Dow gained about 67 points today to 26,452. NASDAQ added 24, closed at 8,000 and change, and the S&P was up a point. Some of the other earnings investors focused on today included Bank of America, which was the latest big financial services company to report, as well as Dow Components United Healthcare and Johnson & Johnson. Consumers are well positioned to take advantage of healthcare options. They have jobs and they have insurance. And that is helping Johnson & Johnson sell more prescription drugs and medical devices. Pharmaceutical sales rose a little more than 4%, helping to offset a decline in sales of its consumer products like Band-Aids and Tylenol. Johnson & Johnson posted better than expected first quarter profits and sales and also raised its forecast for the rest of the year.
We're actually in a very good spot. We're in a stage where the unemployment rate is low, so people have insurance. You also have universal health care insurance so that people have access to that. And so we're actually in a spot where we're seeing people utilizing health care in a constructive way.
Insurance stocks fell on worries about the Medicare for All proposal by House Democrats in Washington. But United Health Group did raise its profit guidance for the year after posting first quarter sales growth of 9%. Profit jumped by 22% to almost $3.5 billion. CEO David Wickman told analysts that current government and private insurance options are better ways to provide universal coverage with less disruption to the industry. And Bank of America's consumer businesses pushed the nation's second biggest bank to record earnings of $7.3 billion in the first quarter. That's up by 6% on revenue that was unchanged from a year ago. How? Well, profits are up because 3 years of interest rate increases have made loans more profitable for the bank. But with rate hikes seemingly on hold for now, the big banks may have to look elsewhere for growth the rest of this year. As for the stock prices today, J&J and Bank of America were higher, while United Healthcare closed lower today.
Even though earnings season is just starting to get underway, investors are starting to notice a few things. Bob Sani tells us what they are.
Earnings season is just starting to pick up steam, but already a couple of key trends are beginning to emerge. There's good news and bad news. The good news is, so far, companies continue to report earnings well above expectations. Just look at the companies reporting today. Comerica, BlackRock, Bank of America, United Health, all of them beat by very wide margins. Bank of America beat earnings estimates by more than 6%. Comerica beat by more than 9%. BlackRock, 8%. That's way above the usual 3% earnings beat for stocks in the S&P 500. Why such big beats? The analysts, fearing global economic slowdowns in 2019, dramatically slashed their earnings estimates last December, but the meltdown didn't happen. And now it's obvious that many of them cut the earnings estimates too much. But here's the bad news. There's a very large discrepancy between earnings and revenues. That's a sign that cost pressures are starting to show up in the equation. So right now, earnings are expected to be down 1.8% this quarter, but revenues are going to be up 5%? What's that all about? Companies that have reported have been citing an unfavorable impact from foreign exchange, a stronger dollar. But more importantly, many are now reporting issues with higher wage and higher labor costs, higher raw material costs, and higher transportation costs. Look at J.B. Hunt. This is a trucking giant, logistics giant. They cited all the above as cause for its big revenue miss in the first quarter. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Meanwhile, the world's largest asset manager reported better than expected earnings, and BlackRock revealed it now manages more than $6 trillion. CEO Larry Fink said today he expects investors to pour even more money into stocks.
I think we have a risk of a melt up, not a meltdown here. Despite where the markets are in equities, we have not seen money being put to work. We have record amounts of money in cash.
Christina Hooper joins us now to talk more about that forecast in the market. She's Chief Global Market Strategist at Invesco. Thanks for joining us tonight.
Thank you.
What do you think of Larry Fink's forecast of a possible melt-up at this point?
Well, I think it may be a bit aggressive. I wouldn't be surprised if we saw a melt-up, but I would expect it to be relatively modest when it comes to U.S. stocks. However, I could see more flows going into emerging market stocks, which are much more of a screaming buy right now.
You know, one of the things that Mr. Fink pointed to was the fact that the Fed has taken a step back, but I wonder how much of that is already in the market.
Well, I think as long as the Fed takes a step back, it is certainly part of the story as to why stocks are being supported. But you make a great point, because we don't know how long the Fed is going to remain on hold. In fact, what we saw from the minutes that were released last week from the March meeting is that the Fed isn't as dovish as many expected before reading the minutes. And they could really go either way this year in terms of either hiking rates or lowering rates.
I'm intrigued by your forecast for the emerging markets. I mean, they've been suffering for quite a while. There have been plenty of analysts who've forecast a return for the emerging markets, and it hasn't happened yet. What would be the catalyst to bring them back here?
Well, certainly one of the catalysts is Fed policy. And we're also seeing other central banks getting more accommodative as well. So that's creating a global environment of accommodation. In addition, we're seeing signs of positive momentum in China for their economy, and that should translate into a better economic growth in other parts of emerging markets as well. In addition, valuations are very attractive, so at a certain point, investors will start migrating in the direction of that which looks more attractive.
There is still some headline risk, right? We don't have a trade deal with China. We still have Brexit, definitely unresolved, which could ripple through some of those emerging markets.
Absolutely. The risks are there, but also the opportunities are there. And when we think about economic growth, we're certainly seeing stronger growth there than we are in developed markets such as the U.S.
Christina Hooper with Invesco. Again, thanks for joining us tonight.
Thank you.
It is that time to take a look at some of today's upgrades and downgrades. Marathon Oil was upgraded to outperform from sector perform at RBC Capital Markets. The analyst cites the company's strong free cash flow. The price target is $23. The stock was up a fraction to $17.47. Also at RBC Capital Markets, Dow DuPont was downgraded to sector perform from top pick. The analyst points to macroeconomic concerns for the chemical maker. The price target is $40. The stock closed just below that level at $39.15. Western Digital was upgraded to buy from hold at Deutsche Bank. The analyst cites favorable data for both hard disk drives and NAND flash memory. The price target is $60. The stock was up more than 4.5% to $54.29.
Still ahead, imagine being able to get a sense of how people are feeling worldwide all at once. Well, now you can, and economists are paying attention.
Boeing is reportedly facing calls to shake up its boardroom by two leading shareholder advisory firms. According to the Financial Times, Institutional Shareholder Services has told its clients that Dennis Muhlenberg should be stripped of his dual role as chairman and CEO, and Glass Lewis has recommended the removal of the head of Boeing's audit committee for failing to foresee safety risks with the 737 MAX aircraft. Separately, an FAA panel said the software update to the grounded Boeing jet is, quote, operationally suitable, end quote. And that helped lift the stock in trading today.
Today's economic data were mixed. We had industrial production that fell in March compared to the prior month. Economists say that the weakness in output aligns with a gloomy outlook for the global manufacturing sector. A separate report showed a rise in home builder sentiment in April, the third increase in 4 months. And the National Association of Home Builders said that job growth and low interest rates should help sales in the near term.
We often talk about surveys that measure consumer sentiment, and that's because, in theory, the more confident people feel about their income and job prospects, the more likely they are to spend, and that helps the economy grow. Now, for the first time, there's a new survey that measures sentiment across the globe. Steve Leisman takes a closer look.
They're confident in India, pessimistic in Russia, and relative to the rest of the world, and especially Europe, pretty darn upbeat in the United States. Those are the findings of the new Global Consumer Confidence Index, now made public quarterly by the Conference Board. The findings of the survey of 32,000 online respondents in 64 countries. In the first quarter of 2019, the global index fell 1 point, meaning it remains just 1 point off its all-time high.
What's very important here, it's at, as you already mentioned, historically high. So we have a lot of optimistic consumers around. But you can see it's been going up for quite a while, and it is beginning to peak a little bit. So it does suggest that the consumers probably reached the peak in terms of the optimism.
The most optimistic countries, the Philippines, India, and the United States. The most pessimistic, Russia, Italy, Argentina, and France. The survey looks at views on 3 issues: job prospects, personal financial situation, and spending intentions. India, Vietnam, the Philippines, and the U.S. lead the world in the willingness of its consumers to shop. In Argentina, Venezuela, South Korea, and Russia, they're watching their pesos, bolivars, yuan, and rubles more carefully.
We should be careful that spending intentions doesn't always mean they're actually going to spend, but it does mean, again, that we have more people who are optimistic about their intentions, perhaps to do this down the road. And those 5 countries are exactly the countries where we find a lot of optimistic consumers.
So in this era of big data, add a new category, big global data, where every quarter we can now know how everyone in the world feels all at once, at least the 32,000 who respond to this online survey. For Nightly Business Report, I'm Steve Leisman.
The $26 billion merger between Sprint and T-Mobile may or may not be in doubt. That's where we begin tonight's Market Focus. According to the Wall Street Journal, the planned merger is not likely to be approved by the Justice Department in its current form. But the T-Mobile CEO said today that the premise of that story is simply untrue. Whatever, the news sent Sprint sharply lower in initial after-hours trading tonight, while T-Mobile shares fell as well. Elsewhere, United Airlines reported better than expected earnings thanks to an increase in ticket sales and cost cuts. The company disclosed that it took delivery of 10 737 MAX 9 jets and ordered 24 more. All of the MAX 8 and MAX 9 jets are currently grounded, while Boeing works on a software fix to the plane's stabilizer. United also said it was standing by its 2019 profit forecast. And the stock rose initially in extended hours trading tonight. It closed the regular session at 85.17. Meanwhile, CSX reported quarterly profit that topped Wall Street expectations thanks to growth in shipments that the railroad operator said benefited from the price increases. The stock rose in initial after-hours trading. It finished the regular session at $75.89.
Amgen set a list price of more than $1,800 per month for its new osteoporosis drug. The FDA approved the medicine last week, but mandated a so-called black box warning about an increased risk of heart attack and stroke. The stock fell more than 1.5% to $188.05. Electronic Arts online gaming platform called Origin reportedly exposed gamers to hackers. According to TechCrunch, security researchers found that they could trick an unsuspecting gamer into remotely running malicious code on their computer. Electronic Arts says a fix has been put in place. The stock was down, though, 4% to $93.83. The FDA ordered Boston Scientific to stop the sale and distribution of its surgical mesh implant. The move comes after years of complaints about pelvic pain, bleeding, and scarring in women. The agency says the device has not demonstrated a reasonable assurance of safety and effectiveness. Boston Scientific has 10 days to submit its plan to withdraw these products from the market. The shares fell more than 4% to $36.17.
Well, the nation's aging chemical infrastructure is getting new attention following a number of accidents at chemical-related plants. And when accidents like that happen along commercial waterways, the costs can grow very quickly. Brian Sullivan is in the Port of Houston for us tonight.
It was 1 month ago on March 17th that this terminal behind us here on the ship channel of Houston caught fire. That fire erupted, causing a major leak that spilled dangerous chemicals all into the waterways around us, closing one of America's most important waterways for days. Firefighters like the one behind us working in some cases more than 240 hours per 2 weeks to try to put this fire out and contain the dangerous chemicals. In fact, even a month later, you can still smell it in the air. This and a number of other accidents calling attention to the infrastructure crisis, perhaps, that's not getting enough attention in America. The aging infrastructure in oil, gas, and chemical storage. When these things go, it can cause dangerous leaks. It can cause the loss of life, as it did a week later in Crosby, Texas, with a separate incident. And it can cost billions of dollars in damages. For now, this ship channel is still open, but there are many ships that are still out there backlogged. Supply chains are disrupted, but with some cases, 50-year-old facilities and safety regulations. It would not be a sad surprise to see more incidents like this happen in the future. For Nightly Business Report, I'm Brian Sullivan, Port of Houston, Texas.
Coming up, a tech startup you might not have heard of, but it has something that other popular ones don't.
Here's a look at what we're watching for tomorrow. More earnings. Morgan Stanley, Pepsi, Las Vegas Sands are just some of the companies scheduled to report. The Federal Reserve releases its Beige Book, which is an anecdotal look at the economy across the country. And investors will get a chance to react to China's first quarter GDP report, which will be released overnight. Another busy day coming up Wednesday.
In the news tonight, donations are pouring in to help rebuild Notre Dame Cathedral, some coming from France's 3 wealthiest families. The billionaire family behind Louis Vuitton will donate more than $220 million. That was matched by the family behind L'Oreal. And the Pinault family has pledged more than $100 million. Other French companies are also donating, including energy firm Total and consulting company Capgemini, as well as U.S. firms like Apple and IBM.
Well, it's another big week for initial public offerings. Video conferencing company Zoom is preparing to list its shares on Thursday. And even though it may not be as well known as other recently listed companies like Pinterest or Lyft or Uber, which comes public next month, it does have one thing that those companies do not. That would be profits. Deirdre Bosa is back with us tonight.
Some of the world's biggest companies use it for meetings. Individuals use it to chat with friends, family, and even for personal training sessions. But this isn't FaceTime or Skype. It's Zoom, a video conference startup that has made a name for itself in a very crowded landscape. And it's about to enter this year's class of 2019 initial public offerings. This week, it will join other names like Lyft and soon Uber in tapping public markets for the very first time.
These companies are very disruptive. Some are profitable, others are not. We even see some of our unicorns that, the revenues, the hype around them makes them think these are significant companies, like billion-dollar revenue companies. They're not necessarily at that size.
But unlike Uber and Lyft that are burning through billions of dollars to grow their businesses, Zoom is already profitable. It's also growing faster, more than doubling revenue last year. Since its launch in 2012, Zoom's customer base now includes Pandora, Uber, Gap, and Wells Fargo. But as with all of this year's tech IPOs, how it performs in the weeks and months ahead is not guaranteed. Zoom has to stay competitive to keep its edge in a field that includes big enterprise and consumer names alike: Cisco, Microsoft, Google, Amazon, and Facebook. Within its IPO paperwork, the company says that an inability to attract new customers and to get people to pay for more expensive subscription services could harm the business. This week, though, it will debut as a rare breed of unicorn, the name given to so-called billion-dollar-plus startups. It's profitable. For Nightly Business Report, Deirdre Boza, San Francisco.
Before we go, one more look at the day on Wall Street. The Dow gained 67 points. The Nasdaq added 24 to close at 8,000, and the S&P 500 was up 1. That is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening, everybody. We will see you tomorrow.